Thank you so much, Mr. Mukherjee, for being here, and I'm very excited to chat with you. Of
Well, I'm glad to join you, Joseph. It's a pleasure, and thank you for inviting me on your YouTube channel.
course. So starting off, could you please introduce yourself? Tell me about what you do and how you became interested in finance.
I'm happy to do it. So I am Niladri Mukherjee or Neel Mukherjee, whatever rolls off your tongue, you can call me. What I do is I am the Chief Investment Officer for TIAA Wealth Management. TIAA is a big Fortune 500 company, and it is in the business of providing pension funds and mutual funds and other asset management products and wealth management services to high net worth individuals. Most of our clients are in the education sector. They're college professors,
Hmm.
school teachers. I'm sure at your school, many of the teachers have retirement accounts with TIA. So that's what we do. And I am the chief investment officer for the wealth management side of the business. And what that means is that we have roughly $200 billion that we manage, that my team is responsible for managing. My team comprises of something like 150 individuals. They're all investment professionals, and we have the pleasure and the huge responsibility of managing the retirement assets for many of our clients and participants. What do I do specifically? Well, I manage this incredible group of people who work for me, who work for our clients. I spend a lot of my days reading about the markets, about the economy, about setting the direction for the firm in terms of uh, where we should be investing our clients' money. And I also spend a lot of time meeting with our clients, talking to them. Just last evening, I was in Long Island at a really awesome venue where we invited about 60 of our clients to come, and I had the opportunity to talk to them about the latest views about policy and politics and geopolitical affairs and the economy, etc. So that's what I do. Um, how did I get interested in finance is a very interesting question. Takes me way back to I grew up in India, and my undergrad, if you can believe it or not, was in physics. I was a physics major because I liked the subject, and I was fairly good at science. So I started off as a physics major, but in all honesty, I quickly figured out as I was going through my undergrad years that I probably wasn't smart enough to be a scientist. And I didn't want to spend all my years being a college professor as well. Nothing against it, but it just wasn't for me. And I was on the side interested in the world of business, the world of finance, uh, how the stock market worked. So I used to, on the side, read like business journals and finance journals. And I really decided to take my career in that direction as I was graduating from my undergrad. Then I went and did a master's in finance in India. And then I started working for, and I'm sort of giving you a little bit of a backstory as to how I came to be where I am. I started working in India for a finance company, and I used to interact with a lot of bankers from the United States and New York, people who worked on Wall Street. And as a 21, 22-year old, I was very impressed with their knowledge, their skill, and what they brought to the table. And so I used to go around and ask them, tell me about your background and what do you do and how did you come to this position? And they told me that I did my MBA from this school and I worked in that firm and I lived in New York for 5 years. And that's when I decided that, okay, I need to get my MBA in the United States and specialize in finance. And that would be my entree into Wall Street finance. And so that's what I did. And so when I came here, I dived into it. I still didn't know what um, version of finance I wanted to go into, but increasingly throughout my master's here at I went to NYU, um, it became very clear to me that the most exciting aspect of finance for me was investing and the financial markets. And so I started to move in that direction. I got a job with an asset management company. Then I started working for Merrill Lynch, which was a big investment bank that became Bank of America. And then in the last couple of years, after spending 17 years at Bank of America, I shifted over to TIAA, where I am today, heading an investment organization.
Yeah, that's quite the journey. And so during your career, what would you say has been the most rewarding part so far?
Uh, the best part about my job, Joseph, is that I don't feel that it's work sometimes.
Hmm.
And I love what I do. The markets are changing every day. If you think about the world of investing and markets, it's reacting to different things. It's reacting to, what's happening in Washington, D.C., what's happening in Congress, what's happening geopolitically, what's happening in the economy. Every single data point that comes out on the labor market or consumer spending or interest rates that the Federal Reserve does, it moves the markets. And the markets are very quick to price in the new information that comes in.
Hmm.
And that's what's exciting. And you are sitting there, and this is what I find very rewarding about my profession is I get to sit there, read a lot, think a lot, I write a lot as well, and I get to speak with people who are way smarter than I am. These could be geopolitical experts, uh, financial services, economists, investment strategists, people who do broad asset allocation work, people who are experts in artificial intelligence and what's happening there. I get to speak to all of these folks and form an opinion.
Hmm.
And taking that opinion, I get to invest according to that opinion on behalf of my clients. So the most rewarding thing is that for me personally. And even more rewarding than that is when we can invest for our clients and that leads to positive outcomes
Hmm.
and that helps them achieve their financial goals. To me, that nothing is more important and rewarding than ultimately me doing that good job so that my clients can retire comfortably or achieve any other financial goal that they intend to achieve.
Thank you. It's very, very kind-hearted and very warming, you know? And
Yeah, and I'll tell you one thing I'll mention since you said that sometimes financial services or finance conjures of images of people who are you know huge type A personalities running around making trades, making money, and all in it for themselves. Nothing can be further from the truth.
mhm,
99.99% of the people in financial services do it because they love it, and they're doing it because they're serving clients, their clients who have a purpose.
mhm,
Either they're, like I said, financial service has a lot of different flavors to it, a lot of different kinds of professions within financial services. For me, as an asset manager, as a wealth management chief investment officer, I help individual clients achieve their financial goals. That's why I invest on their behalf. If there are investment bankers who are helping big corporations and small corporations raise capital and make decisions about mergers and acquisitions. Why is that important? Because that leads to the productive growth of the company. And eventually, if you do it again and again and again, it leads to a better, more productive economy. People who are doing sales and trading, buying and selling securities on behalf of their clients, are trying to achieve the best prices for their clients. So when you go to buy an ETF or a mutual fund in your brokerage account, or someone maybe they expect to get a good price, and the sales and trading operation is helping you do that. So the financial services is such an infrastructure sector, much like when you go to your house and you switch on your fan or your lights or your AC. Without that electricity, we cannot survive, right?
Hmm.
Financial services is very similar. It's the lifeblood of the economy that we live in these days.
Hmm. And what would you say is one financial term that everyone should know, even if they're not going into finance?
It's a great question. So it's a very simple term, but it has very different layers. So the term that everybody should be familiar with is net worth,
Hmm.
right? Everybody throws around, hey, what's your net worth? What's their net worth? A net worth is, and actually this is three terms rolled into one. Net worth is equal to your assets minus your liabilities. What is assets? Assets are things that you own and that have some value. And because you own it, you bought it, you paid money for it, and then you can sell it. That's an asset, right? And what's the example of an asset? Asset is, your it can be someone's savings account. It can be the stocks that they own in a brokerage account. It can be their home.
Hmm.
It can be the phone. It can be their bike. It can be their car. That's an asset because you paid for it. The other aspect of assets is they're assets which over time go up in value, like the home that your parents may be owning, or um, um, stocks. They go up in value over time. And there are assets which can lose value over time, like the car loses value over time. So that's the assets is one aspect of net worth. And then you subtract from assets liabilities. Liabilities is stuff that you owe others.
Hmm.
So if you go to a bank or if your friend gives you $20 and you're expected to return the $20 back to your friend, the $20 doesn't add to your net worth. It's actually something that you owe them back. So
Hmm.
what's an example of liabilities? It's the friend who owes you $20. You are holding it, but it's a liability. It's a car loan. It's a student loan. It's a credit card debt, right? These are all liabilities. You have the cash, but you have to pay it back. So everybody should understand your net worth is your assets minus your liabilities. And to grow your net worth over time, you have to increase the size of your asset base and you have to reduce the size of your liabilities. And you have to invest in the right kind of assets, the assets which go up in value, not so much in the assets which go down in value.
Hmm.
So that's something that everybody, if they understand this concept, this equation well, I think most people will be better off in the long term.
Hmm. And as a high schooler myself, do you think that financial literacy is taught enough in schools, and why or why not?
It's a great question. So I believe that financial literacy is not universally taught in US schools.
Hmm.
And the way it's taught, it varies a lot among different districts, among different states. Some states are now mandating a standalone personal finance course. Others just integrate the financial topics into subjects like math and economics or social studies. So it's not universally done in the way that there's no universal standard. But I will say that in the last few years, the availability of these courses and the opportunity for young people across America to learn about essential personal finance topics has jumped, has improved a lot. Um, Recent reports, for example, say that more than two-thirds of all states are now requiring personal finance classes for high school graduation.
Hmm.
In an important field like economics, I believe roughly 28 or 30 states now require study for high school graduation, with some states implementing it again through redesigned social studies and civics and government courses rather than an all new class. And I'm so glad to see that smart folks like you are thinking about this. You have a YouTube channel on this now, but financial literacy is increasingly being recognized as essential.
Hmm.
And many studies, by the way, show that there's a direct correlation between financial literacy and financial success,
Hmm.
right? And the earlier you can teach people financial literacy and basic financial concept, they're 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 they will be better off in the long term. They'll make better financial decisions for themselves and for their families. And by the way, much of this learning or much of the value of early financial literacy comes from avoiding, let's say, taking on a lot of debt, taking on a lot of credit card, increasing your credit card balances, um, and then aiming for better credit card scores. So all of that is really important to understand at an early age, so that down the line you have a great, good credit score by yourself, and that means that you can get insurance, you can go auto loans, you can get home mortgages at a much more preferential rate than the next person can who is not so well off in terms of financial literacy and their credit scores.
Hmm. Thank you. And
And I will say, I'll end with this, that teaching students about financial markets, and you're contributing to that right now, that's the greatest asset for building wealth in the long term.
mhm. And on the topic of high school, as a student, my school life and just school as a whole has changed so drastically with the emergence of new technologies and artificial intelligence. So similarly, how is the finance industry changing, especially with technology and AI?
Well, it's a topic we discuss and talk about pretty much every day, Joseph, if you ask me. I mean, we think that AI is a transformative technology. In fact, it's likely to become a general purpose technology over the next 5 to 10 years, similar to what electricity became eventually, the internet became eventually, and the production system of automobiles became eventually. It'll become a general purpose technology, and it will completely change how businesses operate, how consumers consume. It will speed up the scientific research process. It will speed up the pace of innovation. It will lead to more productivity improvements throughout the economy. AI will undoubtedly transform finance as well. It is already doing that. It will automate some of the routine tasks in our industry, like loan processing, fraud detection, customer service. You'll notice that when you call maybe you don't do that, but people who call banks or other companies, they have to go through a AI agent many times before they can finally get to speaking to a human being, because companies have figured out that half the calls they can service their clients using just a chatbot rather than going to an actual human being, right? So when all these routine tasks are automated by AI and it's happening very quickly, it'll reduce manual errors and it'll free up the staff to do much more higher value added work. So that's what's happening and will increasingly happen. It will it will lead to more personalization of how we serve customers. So, I gave the example of AI powered chatbots. Virtual assistants can provide personalized instant responses. They could be tailored banking relationships. AI can, for certain level of assets, AI can tailor recommendations to one's unique financial situation, their risk tolerance, their goals. They can consider factors like jobs and spending habits and upcoming life events. You can do some of this in an AI operated way as well without a human being interfering. Excuse me. And then, I talked about sales and trading before and investment strategy. AI driven algorithms, they're already being deployed in trading. They analyze market data. They analyze the news on a real-time basis. They execute these trades, whether it's stocks or bonds or derivatives, and everything in between. They can do it in a faster speed and more efficiently, and that eventually benefits customers who are buying and selling these securities in the marketplace. And the one other thing I will say is, you asked about AI. Another sort of technology which is very promising is the blockchain technology. And I think that will impact finance as well. It will reduce the cost of and the time to move money around the world. It can also promote financial inclusion around the world by providing secure, low cost access to financial services for underserved populations in other countries. The technology is now already supporting services like stablecoins. Eventually, it may support services like central bank digital currencies. It can lead to tokenization of real world assets,
Hmm.
and it can basically reshape how value is exchanged around the world. So, you know, if you want to be in financial services, you just have to make AI your companion, and you have to learn about all these up and coming skills, which are very quickly getting integrated into the mainstream financial services processes.
Hmm. So on that note, would you say that AI could potentially become a rival to your role in the future, or do you think it'll simply serve as a companion?
So my impression is it'll become a companion.
Hmm.
So anyone who is not using AI runs the risk of their job being taken over by some other human being who's using AI as a companion,
Hmm.
right? Um, it I will say that there's a lot of concern out there that AI, because of how powerful this technology is, might lead to a lot of job losses. I'm a little bit more sanguine on that front. I feel like the United States economy over the very long term, over centuries and decades, the US always reinvents itself every 25 years or so, the economy. If it's, it started with obviously you go way back, electricity, industrialization, the advent of cars and highways and suburban life, and then coming to the mainframe, internet, personal computers, and the internet came into being, then the mobile phones came into being, and now AI is taking over. So the number of people who are employed in the US keeps going up.
Hmm.
And it's because as some of these routine tasks are automated, which many people don't want to do anyways, they can free up their time to get trained off for the jobs of the future. So by the time you enter the workforce, Joseph,
Hmm.
financial services will look very different, but there'll be different kinds of jobs than the ones that are available today. And you will just have to be ready to take those jobs. It depends on the kind of training you do, it depends on the mindset. And I'm very optimistic. I think there's a very interesting report by the World Economic Forum, by the way. If you want to Google it and take a look, they say that by the year 2030, artificial intelligence and related technologies will displace 92 million jobs, but they will also create 170 million new jobs. So I think something like that will happen. Many of the jobs of the future, you and I cannot even imagine today. They'll just come up and then you'll know, aha, here's a new profession.
That's very interesting to hear. And lastly, what advice would you give to high schoolers like me who are interested in pursuing a career in finance? You mentioned earlier how you did a lot of reading, and so are there any books you'd recommend reading, journals, and or listening to podcasts or stuff like that?
First of all, I would say that if you're in high school and you have already decided to pursue finance, all the power to you. Um, but most people in high school, my recommendation to them is to keep their minds open, right? You have a long way to go. You have college in front of you, and at some point in college, you'll get a better sense of where your strengths are, where your interests lie. So the first thing I will say is majority of the people keep your mind open because there's a million other professions out there. And even within financial services, keep your mind open as to where you go. I mean, even in financial services, in a big bank, for example, like I said, there's investment bankers, there's wealth management folks, there's portfolio managers, there's sales and trading folks, but supporting them are a humongous different varieties of professions. They're in compliance, there's in regulation, they're in marketing, they're in risk management, et cetera, et cetera, et cetera. They're in financial services, corporate finance, supporting the frontline people as well. So there's lots of different flavors out there. So keep yourself flexible as you go through the next few years, and then into college you'll start getting a better sense of where you want to take your career. But having said that, um, listen, to get into finance there is no set background, right? And I'm case in point, right? I'm an example of that with my physics background in undergrad, right? um, but if you're really interested in finance, then by all means go ahead, try to gain the knowledge and set the foundation for yourself. And there's a number of ways you can do that. Number one, you can take some relevant classes in excuse me, in business, in accounting, in economics, in social, even in social studies, because it's all has relevance to finance, right? Number one. Number two, um, build some real world knowledge as well. So I would say open a bank account, learn how to manage personal finance. There's a different kinds of apps which help you do that. Open a brokerage account. Ask your parents to open one for you, and you can start investing, buying a few stocks here and there. And the best way to learn about something is to kind of own it, and then you're forced to learn about it and read about it. So open a brokerage account, I would say. Learn how to use a credit card responsibly. It's not free money, right? So where does it come from? Where does this money come from? Where does it go? When I swipe my credit card, what happens? Things like that. Um, I would say participate in relevant extracurricular activities. There's investment clubs and finance clubs that you can be a part of. If there's none in your school, start one,
Hmm.
right? Get an internship at a finance firm or a company where there's a financial service finance role. You could do that. Do some research with somebody working in the profession. To your point, read up about finance and business. So you can go to Yahoo Finance and read, their stuff. You can go to CNBC's website. You can pick up a copy of the Wall Street Journal. You can pick up a copy of The Economist. And that, as you read more of that, you'll find that you're becoming better and better and better, and the neurons in your brains are connecting in a way, and you'll suddenly start to get it, how things work. And then, I would say, the last thing I will say is finance and technology are coming together very quickly. And technology, in fact, is taking over most of the world. But surely it's happening in finance. So maybe learn some basic programming skills using Python or Excel. These are used extensively in data analysis and modeling in financial services. In fact, people who have their data analysis and modeling skills and know Python, etc., they're much sought after on Wall Street. So I would say do many of these things, and it'll set you on the right path to becoming even more curious, and it'll give you a leg up over other folks.
All right. So thank you so much, Mr. Mukherjee. I greatly appreciate your time, and it was a real pleasure to be able to speak with you and listen to your valuable insights.